last year, we chose PDD Holdings, which is the holding company of PDD, the platform in China, as well as Temu, the international retail platform that connects Chinese producers and merchants directly to consumers all around the world. That returned just over 17% in dollar terms over the past. So those were our previous ideas. And now, drum roll, please, it's time for our 2026 idea. And it is TBC Bank Group. It is a holding company that's listed in London, and it operates two banks, the Caucasus and Central Asia. The two banks are TBC Bank Georgia, which represents 90% of the group's profits, and TBC Uzbekistan, which represents 10% of the profits. TBC Bank Georgia was founded in 1992. So this is a bank that's been around for more than 30 years. It's got a $3 billion market cap, and it is listed on the LSE main board. Previously, they had global depository receipts, but they restructured those, and they are now listed on the main board. So most international investors that can trade on stock exchanges internationally should be able to buy TBC Bank Group shares. They've got a December year end, so we are waiting with bated breath on the results for 2025 to December 2025. Those will be released in the coming few weeks. If you look at the two banks, there's steady performance in Georgia. They're one of only two players with a 40% market share each. It's a duopolistic market, quite stable. But then very strong performance from Uzbekistan. That's the growth market they entered a couple of years ago. Although they have had some wobbles recently in Uzbekistan, and we'll touch on those a bit later. If you look at the financials of TBC Bank Group, the long-term ROEs have been above 20%, but it's trading at a price-earnings ratio of only 6 times, and a trailing tangible price-to-book ratio of only 1.3 times. And this is the core of the idea. Basically, what we are saying is that it's trading at the wrong price. The valuation of the company is much higher than the price. There's a substantial gap, a substantial margin of safety between the price of TBC Bank Group shares and the fair value of TBC Bank Group shares. They are substantially higher than the price in our opinion. The group has got a very strong management team. It has had the same CEO since 1995, so 30 years plus of the same CEO. But seeing that they operate in interesting places like the Caucasus and Central Asia, geopolitical risk is front of mind. If you look at the history of TBC Bank Georgia, it's a universal bank, which means they've got retail operations, they've got corporate and investment banking, so they do all of the major lines of banking business. Founded in 1992 with only $500 of capital. It was part of TBC Group, which included the Georgian Glass and Mineral Water Company. But subsequently, in 2014, when they listed these global depository receipts in London, and when they raised $240 million, of which just under $100 million went to the bank itself, and the other $140 million went to selling shareholders, they effectively demerged the glass and mineral business, and then it was a pure banking business that was listed in London. 2 years later, they reorganized the global depository receipts into a new holding company, a PLC, a UK domiciled company, and they got a premium LSE listing. Since then, for the last 10 years, the share price has increased by 15% per annum, and you've picked up a 5% per annum dividend yield. So the compound annual return of the shares of the last 10 years has been a very pleasing 20% per annum. That has taken them to the current $3 billion market cap. Like I said, they've got a December year end. The results are presented in Georgian lari. That's the currency of Georgia. So one needs to be cognizant of that, and I'll touch on that a bit later. But there is a high level of dollarization in the economy. It means that it used to be more than half, it's now slightly half of their loans are extended in US dollars, and US dollars are generally accepted in Georgia, and US dollars are widely used. Although the central bank is trying to move from dollarization to larization, and have the banks lend more in laris, take more deposits in laris, and that would also then decrease the foreign exchange risk that the bank is exposed to due to the high level of dollarization in the Georgian economy. If you look at the Georgian lari compared to the pound, and I compare it to the pound because the shares are denominated in British pounds, that exchange rate has actually been flat over the past 10 years, which is quite surprising. We think that a country like Georgia, which has heightened geopolitical risk, might see currency weakening. We've got relatively high inflation that has been decreasing. But actually, the Georgian lari is only weakened by less than 1% per annum against the British pound over the past 25 years. And it's been flat over the last 10 years with some volatility, especially in 2022 around the Ukrainian invasion, which is the same vicinity, geographical vicinity. So one shouldn't be too scared of taking Georgian lari exposure, I would say. Like I mentioned, within the Georgian banking system, there are two banks that have got 40% market share. The one is TBC Bank Georgia. The other one is Bank of Georgia, which had a name change. It's now called Line Finance, and it's also listed in London, interestingly enough. We do own the shares of both these banks. They are the two leading banks in Georgia. TBC Bank Georgia leads in the affluent retail market, while Bank of Georgia is more for your mid and lower retail markets where they lead. And then Bank of Georgia also leads in the corporate and micro, small, and medium enterprise sectors, meaning that they are the largest universal bank in Georgia. The bank was co-founded by Mamuka Kazaradze. He later entered politics. And I mentioned the geopolitical risk of Georgia. This is one of those where the founder was later controversially found guilty of fraud. A judge found that there were related party loans that were made to the co-founder that he said constituted fraud. Mr. Kazaradze was sentenced to an 8-month jail sentence earlier this year when he did not take part in these proceedings, but he was pardoned by the current president of Georgia in September 2025. So interesting political dynamics in Georgia. The current CEO has been in the position for more than 30 years, Vakhtang Butchrikriyitsa, and I will probably be butchering a lot of names, Georgian names, in this presentation, but it speaks to the good management team when you have a CEO that has got that has had such a long tenure and has delivered such good returns for shareholders. TBC Bank Georgia does have a traditional physical branch network, but it has been shrinking the last few years as they've shifted from a physical bank model to a strong digital offering, and more specifically, a super app strategy, which is a strategy that a few fintechs have been following the last few years. Some investors might also know about Kaspi, which is the leading fintech player in Kazakhstan. It's now listed on the NYSE. It moved from London last year. We also own Kaspi shares. And they've really shown what you can do when a bank follows a super app strategy, doesn't have branches, but creates an app where you can not just do your banking, but you can do almost all your financial services. And TBC Bank Georgia is to some extent mirroring that and following that strategy quite successfully. In May 2018, TBC Bank Georgia launched Space. That was their app, their new bank offering, which was a branchless banking app. And Space was effectively then the new business within TBC Bank Georgia that they used to move into Uzbekistan, and is going to be their vehicle for further expansion. So Uzbekistan is not going to be the last market outside of Georgia that they enter. It's just the first of quite a few that will probably follow based on this infrastructure that they built internally by creating this Space app. So let's look a bit at Georgia, not the US state, but the country of Georgia that's in the Caucasus, squeezed in between Russia, the north, and then Turkey, Armenia, and Azerbaijan to the south of Georgia. It's the emerging open free market country. It's an ex-Soviet state, was part of the USSR. They have 3.7 million people, so a relatively small country from a population perspective. To put it in context, if you look at the other Caucasus, Azerbaijan has got just over 10 million people, and Armenia 3.1 million people. Their nominal GDP is $35 billion. That puts them the 104th biggest country in the world when it comes to nominal GDP. But the GDP per capita at roughly $10,000 per person is around 83rd. So you can say that they are slightly higher than average in terms of GDP per capita. The country also ranks 57th on the Human Development Index, so there's reasonably decent infrastructure in the country. Unemployment rate is 13.9%. That is on the high side, but inflation seems to be under control at 4.8%. GDP growth has been very, very strong over the last few years.